Hello everyone, welcome to my channel where I talk about personal finance. Today I'm going to talk about how to build wealth slowly. In today's world, we are constantly surrounded by stories of overnight success. Social media is filled with people claiming they became millionaires in a matter of months through cryptocurrency, real estate, or the latest investment trend. While these stories grab attention, they rarely tell the whole truth. The reality is that most lasting wealth is built slowly. It's created through consistent habits, smart financial decisions, and patience over many years, not through shortcuts or lucky breaks. If you are wondering how ordinary people build extraordinary wealth, this video is for you. Let's explore how to build wealth slowly and why taking the long term approach is often the smartest path to financial freedom. Wealth starts with your mindset. Build your build before you build wealth. You need to change the way you think about money. Many people focus on looking wealthy rather than becoming wealthy. They buy expensive cars, designer clothes, and luxury items to impress others, often financed with debt. Wealthy people, on the other hand, usually focus on building assets instead of appearances. True wealth isn't what people see, it's what they do not see. It's the saving account, the investments, the retirement fund, the paid off house, and the financial security that quietly grows over time. Building wealth begins by understanding that money is a tool, not a status symbol. Spend less than you earn. This may sound simple, but it's the foundation of every wealth building plan. If you consistently spend everything you earn, you will never have money available to save or invest. Creating a, a gap between your income and your expenses allows you to build wealth over time. This does not mean living a miserable life. It means making intentional spending decisions and avoiding lifestyle inflation every time your income increases. When you receive a raise, try increasing your savings before increasing your spending. Small decisions today create big financial results later. Create an emergency fund. Before investing aggressively, build a financial safety net. Unexpected expenses happen to everyone. Cars break down, medical bills appear, home repair become necessary. Without an emergency fund, these expenses often lead to debt. Aim to save 3 to 6 months of essential living expenses. Even if you start with just a few dollars every week, consistently matters far more than perfection. An emergency fund protects your long term investments from becoming short term solutions. Next thing, eliminate high interest debt. Debt is one of the biggest obstacles to building wealth. High interest credit cards can easily charge interest rates of 20% or more. Very few investments consistently earn returns that's high. Paying off expensive debt often provides one of the biggest financial returns available. Focus on paying more than the minimum payment whenever possible. Whether you choose the snowball method or the avalanche method, staying consistent is what matters most. The less money you spend on interest, the more money you keep working for yourself. Invest consistently. One of the most powerful wealth building strategy is investing regularly. You do not need thousands of dollars to begin. Many investment accounts allow you to start with small monthly contributions. The key is consistency. Instead of trying to predict the perfect time to invest, commit to investing a fixed amount every month. This strategy, known as dollar cost averaging, reduces the impact of market ups and downs while building wealth steadily over time. Remember, time in the market is often more important than time in the market. Let compound growth work. Albert Einstein is often credited with calling compound interest the eighth wonder of the world. Whether or not he actually said it, the principle remains incredible powerful. Compound growth means your investments earn returns and those returns begins earning returns as well. Over time, this creates exponential growth. The earlier you start investing, the more time compounding has to work. Even small monthly investments can grow into substantial wealth over several decades. Patience is one of the greatest financial advantages you can have. Increase your income. While controlling expenses is important, increasing your income can accelerate wealth building. Look for opportunities to improve your skills, earn promotions, negotiate raises, or start additional income streams. Many wealthy individuals do not rely on a single source of income. They may have salaries, investments, rental properties, dividends, or side businesses generating additional cash flow. The more income you create, the more opportunities you have to save and invest. Buy assets instead of liabilities. One of the simplest way to understand wealth is this. Assets put money into your pocket. Liabilities take money out. Assets include investments, businesses, rental properties, and dividend paying stocks. Liabilities include unnecessary debt and purchases that lose value while continue to cost money. Before making major purchases, ask yourself, will this make me wealthier over time or will it cost me more money? That single question can transform your financial future. Stay consistent during market ups and downs. Building wealth requires emotional discipline. Markets rise, markets fall, economic conditions change. Many investors panic during downturns and sell their investments at the worst possible time. Successful long term investors understand that temporary declines are a normal part of investing. Rather than reacting emotionally, they stay focused on their long term goals. Consistency often outperforms emotional decision making. Continue learning. Financial education never ends. Read books about investing. Listen to personal finance podcasts. Watch educational videos. Learn about budgeting, taxes, retirement planning, and wealth management. The more knowledge you gain, the better financial decisions you will make. Knowledge compounds just like money. Every lesson improves your future choices. Protect your wealth. Build wealth. Building wealth is only part of the journey. Protecting it is equally important. Maintain appropriate insurance coverage. Create a will or estate plan. Diversify your investments instead of putting everything into one opportunity. Avoid scams promising guaranteed high returns with little risk. If something sounds too good to be true, it usually is. Long term wealth is built through careful planning, not risky shortcuts. Be patient. Perhaps the most important lesson is patience. Wealth rarely appears overnight. It grows gradually through hundreds of smart financial decisions repeated consistently over many years. Some months will feel slow, some years will feel disappointed, but every dollar saved, every debt paid off, and every investment made moves you one step closer to financial freedom. In conclusion, I believe that building wealth slowly may not sound exciting, but it's one of the most reliable paths to long-term financial success. By spending less than you earn, eliminating debt, investing consistently, increasing your income, buying assets, and allowing compound growth to work over time, you create a financial foundation that becomes stronger every year. Remember, wealth isn't about how much money you make, it's about how much you keep, how wisely you invest it, and how consistently you allow it to grow. You do not need to become rich overnight. You simply need to make smart decisions today. Repeat them tomorrow and stay committed for long run. Because true wealth isn't built in a day. It is built one paycheck, one investment, and one good financial decision at a time. Thanks for watching this video and do not forget to subscribe to my channel.